Hi everyone, it's Amit. So in today's video, what I wanted to talk about are some investments and trading opportunities for 2021. But before I do that, I do need to issue a quick disclaimer. Nothing in this video is intended to be financial advice. Therefore, if you buy any of these funds, you're assuming wholly the risks associated with it, and therefore I highly recommend that you do your own investment analysis before you make any purchase type of decisions. Now, I've been investing in stocks and funds for over 20 years at this point, and I've had a mixed bag of results. I've had some big wins, I've had some losses as well, and I think that is really characteristic of just about everyone's portfolio. But where I'm going with this is none of this time has this trading portfolio created a significant risk for me personally, because I only maintain less than 5% of my overarching net worth to be used for trading related purposes. So the investment thesis that I've come up with in terms of developing or identifying these 8 funds that I'll talk about in this video are based on 2 macro factors, right? One is the assumption of the presidency by Joe Biden, and the second is this overarching global healthcare crisis and basically coming out of it, and hopefully that should result in some returns. So before I go into these individual funds, just real quick, this is a personal finance channel focused on helping you make smarter financial decisions. Definitely subscribe to the channel and ring the notification bell as well. So let's get into it and let's talk about some of these funds. So the first fund I'll talk about is ICLN. ICLN is currently trading at about $28.24. It is primarily focused on the producers of energy such as solar, wind, and other renewable sources. It has an expense ratio of 0.46%, and I think you're going to find that to be true for all of these, right? They're all going to have a slightly higher expense ratio than what you'll see from like an S&P 500 ETF. The rationale or the thesis for ICLN is primarily a Biden trade. So during the campaign trail, and is also true with the Democrats in general, there is this notion of being very pro-clean energy. Joe Biden has talked about re-entering the Paris Climate Accord. So there is a lot of energy and a lot of focus as it relates to clean energy. That should in itself drive some level of deregulation thereof as it relates to clean energy, lower than what it currently is, increased adoption, more benefits associated with companies that actually create this sort of energy. So I'm expecting a lot of that type of thing to happen, and therefore ICLN is pretty high from a trading perspective during the Joe Biden presidency. The next one is Smog, right? Smog currently is trading at $165.48. It's very similar to ICLN, but it does have some differences as well. This guy is focused on alternative energy, so ethanol, wind, solar power, hydro, geothermal is focused on a lot of those similar type of things as ICLN is. However, this one actually has stakes in Tesla and NEO. So it's got a NEO stake of 9.64% of the overarching portfolio, and Tesla is almost at 9.5% as well. So it's a bit broader than ICLN, right? ICLN was very focused on just the energy component. This one does have a bit more broader. This one has an expense ratio of 0.63%, so it's significantly higher than ICLN. And the rationale thesis for this one, very similar to ICLN, is that it is a Biden trade. We are expecting increased investments, breaks, reduced regulations, and it does have a bit of a hybrid notion associated with it. I'll talk about that in a second here, especially when we talk about the next fund, which is DRIV. If you are a believer in autonomous vehicles, electric vehicle components and materials, DRIV is a very good play in that regard. It's currently trading at about $23.97, almost $24. It's got a whopping expense ratio of 0.68%. A significant portion of this particular stock is in Tesla. It's got Tesla, Qualcomm, Apple, NEO, NVIDIA, and so on and so forth. You can see the names that are listed here, and of course check out the website as well so that you can get the full litany of stocks that this one is invested in. So one could argue that if you were to buy Smog, for example, you could kind of like get the best of both worlds, right? You could get the DRIV components with Tesla and NEO, as well as you can get the clean energy component associated with ICLN. But there are some certain differences, right? This DRIV is very focused on this autonomous vehicle sector, right? And ICLN is very, very focused on the energy sector. And while Smog has the best, sort of like has got a little bit of both worlds, it doesn't necessarily have the extent of the exposure as what a Drive has with like NVIDIA, Alphabet, Microsoft, and so on. So therefore, there is some differences there, right? And that's what makes it an attractive play in 2021. The next one is YOLO, or, it's not that you only live once, right? But the next one is YOLO. It's trading at about $17, and this is a cannabis play. So the Democrats have basically talked about, or are usually more lenient towards the adoption of cannabis. We do expect cannabis to continue to have traction in 2021 as more and more states continue to adopt it. And as long as you have that increased adoption, you're going to have increased demand. There should hopefully at some point in time be some type of regulatory framework in terms of how the money associated with this cannabis play is also being handled, such that this money can easily trickle back into the economy. With that said, with increased adoption of cannabis, YOLO should have some significant runway in 2021 as well. The next one is IFRA, which is a U.S. infrastructure play. So there's been a fair bit of talk on the campaign trail as it relates to coming up with a bill, a substantial bill, mind you, as it relates to improving the U.S. infrastructure. If that does pan out, IFRA should be a direct beneficiary of it. If you do think that a bill will pass, include some of that in the comments below. If you don't, let me know if your rationale as well, as I think it could be very useful for others to listen into. This one has a slightly lower expense ratio of 0.40%. And, I think there is some potential significant improvement that could come on this one if some of the bills that was discussed in the campaign trail actually passes. The next one is PEJ. PEJ is less of a Biden side, right? This is more of just a post-global health crisis play. This is focused on leisure and entertainment. This one has various holdings such as Disney, Hilton, Viacom, Penn National Holdings, and it's got a whopping 0.63% expense ratio. The notion fundamentally here is that once this whole vaccine has been distributed and people have taken it, there's going to be this significant pent-up demand in terms of people wanting to get into leisure and entertainment, go to Disney, go across the world, various things, just do that kind of thing. So that's the play here, right? And we expect to see some level of increased growth as it relates to this particular sector. The next one is JETS, right? JETS, nothing associated with the football team. This one currently has a price of $22.38. It's focused on U.S. and non-U.S. airline companies, but it does have a bias towards U.S. airline companies. And of course, it also includes aircraft manufacturers like Boeing and airport companies as well. Expense ratio on this one is 0.60%. This is also a global health crisis post play, as we expect to see air travel to significantly increase in order to kind of like go after those leisure and entertainment spaces that we were talking about earlier. The next one here is GLD, or gold, right? It invests directly in physical gold. I've got a separate video on Bitcoin and gold, so definitely check that out. I'll include that in the end screen as well. But this one is trading at $178.36 with a 0.40% expense ratio. This one is purely an inflation hedge. The government has been printing out money. While we haven't seen significant indications of inflation at this point in time, there's definitely a lot of concern that we will experience some level of inflation into the future. If you are a believer in that thesis, then GLD could be a good opportunity. Now, I haven't specifically talked about certain other ETFs such as XLK, which is a technology ETF, as I expect most people already have a stake or have some level of ownership on this one. But, it is something that if you don't, I do think technology continues to run. It's had a great run in 2020, and I expect it to have a great run in 2021. There's been a fundamental change in the way people do work and in the way people consume goods and services, and I expect that trend to kind of like continue into 2021. This one is trading at just about $130 a share. These funds that I've spoken about, right, they're just intended to reflect, as I mentioned, what I'm doing with my own trading portfolio. Again, this is not intended to be financial advice, right? Definitely do your own investment analysis before you make a determination on whether you're going to own any or all of these. So I hope you enjoyed the contents of this video. So definitely include your own thoughts, right, if on any of these funds that we've talked about in the comments below, as well as any other opportunities that you think could be useful for people to consider as a part of their own investment thesis. I hope you enjoyed the contents of this video. Definitely subscribe to the channel, give it a thumbs up button, and I will see you soon.